how would you say, or what would be some of the reasons that financial advisors and real estate agents should really, really know and understand this product in order for them to better serve their customers?
Yeah, let me start with financial advisors. Fiduciaries in general. Are folks that are really, they're really tasked with developing not just wealth, but also mitigating risk and helping their clients mitigate or reduce their unnecessary expense in their life. Right? It's really a zero-sum game if you think about it. Each of us at the household level carries a balance sheet, right? We have a personal balance sheet. We have our liabilities and we have our assets. And there's only so much money to go around, right? We all wish we could just wave a magic wand and make more of it, but that's not always the case. Most people can't do that. Even if we work harder, it doesn't always equate into a larger paycheck, right? So how else can you fortify your financial security other than cutting back on your expenses and changing your lifestyle? It's very difficult. And even then, when you change your cell phone carrier from one to the other, you don't necessarily change the trajectory of your retirement security, right? You're not farming hundreds of thousands of dollars from changing your cell phone carrier or cutting back on cable a little bit, right? So what's the easiest and the biggest, most obvious place to really farm savings? It's your mortgage. And again, I don't mean to sound sort of adverse as I look inward at our own industry, but it's the truth. Our industry really hasn't done a great job at innovating the mortgage and making it easier to pay down and save money and continue to invest in real estate. That's what the all-in-one loan does. So that savings that a financial advisor's client farms through the use of the all-in-one, not only gets them out of debt faster, but it creates, additional opportunities to develop the wealth side, the asset side of their balance sheet. So for a fiduciary, this speaks volumes. It's people can save money, reduce their mortgage expense and exposure to unnecessary costs while they remain liquid, which helps them also fortify the asset side and maybe be more aggressive. I'm not advocating the use of home equity dollars to invest with. What I'm advocating is sheltering your income from interest expense so that those dollars can then be deployed to grow your wealth with. Okay, there's a difference. Number two, for real estate professionals, if you think about it, they share the same problem that we do as mortgage professionals. Who needs help? How best can I serve them? That's difficult. It's really difficult, I think, to stand out amongst your peers these days. I think as a consumer or a potential home buyer or home seller, and again, I don't mean to sound adverse or like I'm talking down to the industry, but I think as a consumer, it's tough to differentiate one professional from the other. A lot of times, we sort of look like a big bowl of oranges. You can't tell one orange from the other. One orange may be sweeter than that one. But you don't know until you get into it. Right. So, it's fungible. So, how do you differentiate yourself? Well, I'm telling you, when real estate agents participate with the mortgage conversation and they talk up and they talk about the all-in-one loan as an option, right? It really piques curiosity. People are extremely interested in hearing more about reducing the total price tag of financed real estate versus just getting the same old ball and chain, mortgage that just gives them a payment. Let's change that ball and chain into a battle axe, if you will. And a realtor really benefits from that because they're helping their customer pay less in the end. And that also helps that customer buy again sooner, right? Which comes back to that real estate agent. So there's a variety of different ways that this helps. It helps showcase your knowledge, differentiates who you are as a professional, but it also puts your customers in a much better place financially.
Absolutely. Yeah, I think for, somebody going into the all-in-one, even if it's somebody that just wants to pay off their home sooner, save, tens of thousands of dollars in interest, have no change to their spending. I mean, I've done this, the simulator for several people where I compared a 30-year fixed and compared that with the all-in-one. I compared a 30-year fixed at 3.5, the all-in-one loan, and they were paying it off 4 and 5 years, where a traditional 30-year fixed, it's 30 years, right? So
look, yeah, I mean, and you mentioned it, Danielle. I don't mean to cut you off, but you're absolutely right. I get excited when you talk about the simulator, because that's key, right? The interactive simulator is really the tool that allows you to with your customer to compare a traditional mortgage to the all-in-one loan. Look, we don't do this loan unless it's offering a financial benefit, unless it's really truly going to help somebody get ahead. And it's funny because oftentimes, I know you can relate to this, that sometimes when you're running the simulator and you're showing, and it's a full forecast that really is takes in a lot of logic that is can seem complex, but it's extremely easy to use and very realistic and conservative in the result. And I can touch on that comment here in a minute. But what's funny is sometimes when you see a result for somebody that, hey, you're going to, the all-in-one loan can get you paid off in 14.6 years, and you're going to save $82,000 in interest costs versus your traditional mortgage that you already have. It's sort of a letdown, right? Even that kind of result, sometimes you go, because you're expecting the 6-year payoff with $180,000 in interest savings, right? Yeah. It's funny, but that's where the rubber, meets the road, and you can test drive the financial benefit and collect just a minimal amount of information from your customer and run that simulation.
Right.
And do you want me to touch on where to find that, or as a resource that is available on our website? Yeah, on the website is allinOneLoan.com. And if you just scroll down on that homepage, you'll find the calculator there, and it's very easy to use. But
one of the things that say about the all-in-one simulator is what's very, very important is inputting the information correctly. So a lot of times what I'll do is I'll do that with the client. So that way I can ask the right questions, because if you're not accurately putting in like your net deposits, or you're not really sure about what that amount is, that can really change how much interest and how quickly you're able to pay that off. One thing I also wanted to point out in regards to, the traditional person just doing the all-in-one to pay off their home sooner, save all of this in interest, and then taking that real estate investor that, might be getting hard money loans right now at 10-12% because they don't have the cash to be able to buy, fix, flip other properties, or even buy and hold. This is a game changer for them, because they're using the interest rate on the all-in-one loan to be able to go and buy more properties, and also save so much more interest on those other properties as well. So it really is for so many different, types of people. There's so many different things that you can do with the all-in-one loan. I think it's an amazing product. I'm so happy that we have it to share with everybody. And I think that's really it. I mean, I don't know unless there was anything else I missed, I think that's really it.
Yeah, no, I think you covered it very well. Again, I think that everybody should know that it exists, as you indicated before. It may not be for everybody, but I certainly think that even those people that may not, be suitable for it today. And again, a suitable candidate is somebody that is cash flow positive, fairly disciplined with their finances, doesn't spend more than they make routinely. I know that occurs here and there. It can, right? We have kind of peaks and valleys over the course of a year in our expense level, but for the most part, if you're somebody who lives within your means and has some control over your spending, and can qualify for a 30-year fixed mortgage today, and know how to use a checking account, the chances are you'd benefit greatly from this product. You should minimally know that it exists. And that's really the overwhelming message. It's a sign of innovation in the industry. And I think it's a welcome one.
Absolutely.